Hello, I'm John Cunningham, and welcome to another episode of the RedChip Money Report. For those of you new to the show, RedChip is an investor relations, media, and research firm focused on emerging growth companies. Our unique platform combines global multimedia with traditional investor relations, reaching investors around the world. Today's show features interviews with executives of two public companies. First up is BEEM Global, stock symbol BEEM on the Nasdaq. BEEM Global is a clean technology leader providing innovative, sustainable products and technologies for the EV charging market. You'll see an interview with the CEO, Desmond Wheatley, later in today's show. Next up is ASP Isotopes, stock symbol ASPI on the Nasdaq. ASP Isotopes is an emerging leader in isotope enrichment technology with wide application potential across a variety of industries. The company is initially focused on the production of molybdenum 100, targeting the $3 billion medical imaging market. We'll learn more about this initiative and other opportunities ASP Isotopes plans to pursue when we speak with the CEO later in the show. Now, before we get to the first interview, our quote of the week. It comes from the book Small Stocks, Big Money. You can be happy with the companies you own, but you may not be happy with their stock performance. If you know what you're investing in and you're patient, you'll have a day when the market recognizes the value, but that may not be today or tomorrow. This quote comes from Byron Roth, CEO of Roth Capital, featured in Chapter 7 of Small Stocks, Big Money. This is a book of exclusive interviews with some of the biggest players in the microcap space. Get a digital copy on Amazon today for just $18. Now let's get started with our first interview today with BEEM Global.
Desmond, great to meet you. Great to have you here today.
Well, Craig, it's my great pleasure to be here. Thank you for having me. And thanks also to your audience for taking time to listen to my favorite story, BEEM Global.
Desmond, let's start with an overview of BEEM Global and its core business model.
BEEM Global is a San Diego, California-based sustainable technology innovation company. I know that's a bit of a mouthful, but what that means is we actually invent, design, engineer, and then, rather unusually for San Diego, manufacture sustainable and renewably energized products for three market verticals. And those are the electrification of transportation, by far the biggest area of focus for us and the most exciting one. And then behind that, energy security, by which we simply mean a more reliable source of electricity than that which you get from the utility grid, which is, of course, magnificent as it is, prone to blackouts and brownouts from time to time. Our products continue to provide vital electricity during those sorts of events. And then the last one's going to seem like a bit of a strange bedfellow, but it is outdoor media. We don't actually get involved in the selling of outdoor media, but we do provide a renewably energized and sustainable platform so that others can make money with outdoor media. And that's a fantastic sideline, if you like, supporting the other two parts of the business.
Very exciting, Desmond. What are some of the key trends, both in the EV infrastructure industry and in the renewable energy industry, that BEEM Global is capitalizing on?
So Goldman Sachs has referred to the EV charging infrastructure industry as a $6 trillion market. And you know what? They're wrong. It's going to be more than that. But that's a pretty good place to start. You think about it, Craig, we've had 130 years to build all the gas stations in the world. Now we're going to have about 2 decades to build all the electric vehicle charging infrastructure that's going to be required for the magnificent new vehicles that are out there. I mean, I drive a pickup truck that does 0 to 60 in 3 seconds. Impossible to imagine that the American consumer or the global consumer will not adopt these new fantastic gadgets with a gusto. So we're going to need an awful lot of charging infrastructure deployed in a very short period of time. Turns out it takes quite a long time and costs a lot of money to connect to the utility grid, doing all the construction work and electrical work and all those other things that have to go into that process. We've developed a suite of products that generate and store their own electricity and are deployed without construction and without electrical work. And that means we've never had to get any permits either wherever we deploy. And the way that we do that is we combine renewable energy, another fantastic and rapidly growing and very important industry, with our EV charging product, our infrastructure products. So actually, we're the two fantastic industries, renewable energy, sustainability, and then the electrification of transportation. Our products are at the nexus, at the sharp end of that spear, and we're taking advantage of the growth in both areas to propel the business forward.
Could you give us an update on the progress of BEEM Global's flagship products, namely the Solar EV ARC and the ARC Mobility Unit, and their potential impact on customers and the environment?
Well, they're clearly having a very significant impact on them. We had 548% year-over-year increase in sales in 2022. And by the way, that was not up from a down year. The year before that, we'd seen more than a doubling of sales in the prior year as well. So there's just a fantastic rate of growth in this industry right now. What's happening is we're seeing a really robust adoption of electric vehicles, both at the government and consumer end of the spectrum. Certainly a lot of government activity. I mean, obviously the federal government with a fleet of 675,000 vehicles, all of them have to be electric by 2035. All the light duty fleet has to be electric by 2027. So there's just this rapid demand for EV charging infrastructure. Now, our products, particularly the EV ARC product, is deployed in less than 1 hour. That's a process that's competing with a 2-year-long process in New York City. New York City happens to be our largest municipal customer. It takes about 2 years to put a grid-tied charger in the ground in New York City. We do the same thing in 1 hour. You never get a utility bill, so there's no unit cost for the energy. And if there's a blackout or a brownout or something, we continue to charge your vital vehicles. So that's the EV ARC product. I mean, it's just solving a whole host of problems for our customers. It's the lowest total cost of ownership, most robust, and most rapidly deployed and scalable charging infrastructure solution out there. U.S. Army is our biggest customer. We're very proud to have the Marine Corps as a customer as well. We have a lot of veterans working in the organization, so it's a nice balance of trade, if you like there. But on the corporate side as well, workplace charging, lots of corporations now post-COVID, people are going back to the office. They need EV charging at their workplace environment for all these new electric vehicles that people are buying, and we're providing that rapidly for them as well. So EV ARC is a rapid growth engine for us. It's well patented. We've got great intellectual property coverage on that, sold all over the United States and a little bit internationally, plan to expand internationally here before too long. And then behind that, we've got 3 or 4 other patented products or in the patenting process. A couple of them already patented, a couple of them in the path for that, which I frankly think will be even more impactful in the industry in the next couple of years.
Desmond, you've already spoken about some of your strategic relationships, New York City, the United States military, the city of San Diego, your home city. Could you tell us how these partnerships benefit BEEM Global and its shareholders?
It's one of the things I like about the company. Very easy to understand. We make fantastic and well-protected products. We sell them to great customers, and we do it again. And I mean, that's the core to any great business. Have a fantastic suite of products, sell it to great customers who always pay you, and then grow your business with them. We get lots and lots of repeat business with our customers. San Diego's a repeat order, Army repeat, Marine Corps repeat, New York City repeat. In the case of New York City, they've been buying our products since 2015. Every time they issue us a purchase order, it's larger than the last. And so we're just seeing a lot of growth across the board. And the immediate benefit to our shareholders, our employees, and our customers is when we sell these things, the customers get a great deal of benefit from them. Obviously, the employees we're growing our workforce. We're about triple what we were in January of last year. And then from a shareholder point of view, we have great unit economics. Every time an EV ARC leaves our building, we're better off cash-wise than we were before the product left the building. And as we scale up, like any manufacturing business, as we scale up, you can see profitability improving. With volume solves everything for us, and we're seeing that volume growing now. So it's really simple. We sell the products, we get paid for them, and there's a contribution margin every time we do it.
You mentioned growing volume. How does BEEM Global plan to finance its future growth and expansion plans?
Yeah, so this is a sort of a bit of a case of no good deed goes unpunished, I think, Craig. I have had us in a facility in San Diego, California, that was capable of about 20x growth over what we did last year. And I've been paying for that for a long time. Now, of course, that's been impactful to our margins historically. And people, no doubt there were some people out there wondering if I'd made the right decision. I was convinced from very early on that this was going to be a massive growth space, massive growth industry. I knew we had a great head start with well-patented products. And so it was just a matter of having a bit of courage and leadership, frankly. So from a point of view of capitalizing the growth, I'm already in a facility that will let me get to over 300 million in annualized revenue in this existing facility. I bought a battery company last year. We're a big consumer of our batteries because we generate electricity, we store electricity so that our products work at nighttime. It's a solar powered product, but it works at nighttime. So I actually bought the company from whom I've been buying the batteries. And so what we're doing is we're making sure that we have the pieces in place to be able to soak up a hell of a lot more growth here, but without it being capital intensive. And we have a lot of operating leverage in the company as well. So we're in very good shape where that's concerned.
All right, you've touched upon this, Desmond, but I want to focus a little bit more on your plan to stay competitive. It's just a cliche by now that this renewable energy industry is rapidly evolving. What are you going to do to stay ahead?
Well, we've been very careful about selecting areas where we can add a lot of value and create barrier to entry. And we've been also equally careful about staying away from spaces that we think are risky and that we're not really sure how things are going to work out in the future. So to give you a great example of that, people often say that we compete with EV charging companies. No, we don't. We support all the EV charging companies. So if you've heard of ChargePoint or Blink or Electrify America or Enel or any of these other companies, all of them have their products operating on our products. What we're replacing is the trench, the construction work, the electrical work, that whole process that's required to make an EV charger work in a parking space. But we're not competing with the companies that provide the appliance or the software or services behind that. Now, I think there's going to be a lot of change in that in the coming years. There will necessarily be new technology advances, and there's going to have to be a lot of investment in that space. We don't get impacted by that because no matter what new technology comes out in the space, everyone's going to need a mounting asset, somewhere to bolt that charger, that appliance that you're going to plug into your vehicle, and they're going to need a source of electricity. Those things will not change. We just get better and better at providing that. Beyond that, I'm staying away from some of the commodity stuff. The actual solar modules, which convert the sunlight into electricity, highly commoditized, advancing technology all the time. Vast sums being invested in improving those. I buy them. I take advantage of the cost reduction and the improvements in the technology, and then I integrate it into my heavily technologized and well-patented products. So it's a matter of insulating ourselves from the risky part and then making sure we leverage the parts we're good at and differentiate it in.
Question I always like to ask, not just short term, we need to look long term, especially in an industry such as yours, Desmond. What is the long-term plan for BEEM Global, and how are you going to get there?
Yeah, so it's a big world, and we have products which uniquely work anywhere that they can see the sky or anywhere that there's wind. And so that gives us a great deal of opportunity in terms of expansion. So one of the things you're going to see me doing is definitely concentrating. I'll make more acquisitions. I made a very good acquisition last year. I encourage anybody who's looking at this just to look at the fundamentals that went into that acquisition. It was pretty much a textbook deal, and I've done a few. This was right up there as far as textbook is concerned. I intend to make more acquisitions, grow inorganically as well as organically, and I'm very much focused on expansion geographically. Europe is the largest automotive market in the world by far. Our products will be even more popular there than they are in North America, not least because of the Ukraine situation that we have right now. Europeans are really figuring out how dependent they are on centralized sources of fuel and how very worrying that is. Our products are, of course, immune to. Mr. Putin cannot shut down my EV ARC products. He may be able to shut the grid down, but he can't shut down my products. So expect to see that kind of growth from us. And then also expect us to continue to bring new and exciting technology to market. At the moment, we don't see any ceiling at all to our potential growth organically or inorganically. Now, at the end of the day, the exit strategy, I'm publicly traded. I trade on Nasdaq right now. Stock's liquid. We will continue to grow our shareholder base and grow our market cap aggressively. If a strategic comes along and likes the look of us and we're trading where we want to be and there's a premium involved, we might take a look at that. But at the moment, it's just grow, 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 and all the numbers in our portfolio support that.
In summary, Desmond, what is the essential value proposition? Why should investors take an interest in BEEM Global right now?
We make the fastest deployed, most scalable, most robust, lowest total cost of ownership electric vehicle charging infrastructure solution in the world. So remember, replacing all that construction, electrical work, and permitting, and all that sort of stuff. Now, the United States has about 300 million vehicles on its roads today. They are all going to convert to electric in the next couple of decades, which means we'll need something in the order of 60 million publicly available EV chargers in the next couple of decades. The whole industry has deployed about 150,000 in the last 10 years. So somehow we're going to need a couple of million a year the next couple of decades. Again, we have the fastest deployed, most scalable solution out there. So from that point of view, there's nothing but growth ahead of us. We have great discipline where cash and equity is concerned. Take a look at my float, take a look at my shares outstanding. I have probably 1/10 of most of my peers or near peers out there in terms of shares outstanding. At the end of the day, this will be an EPS game. All fundamentals come back to earnings per share. I have a lot less shares into which I will have to divide my earnings in the future. So that makes me a great value as well. We have good technology dividers, barriers to entry for others, and good patents covering all of those things. And again, I've only talked about United States from a numbers requirement, but the whole globe needs our product. We're going to stay ahead and we're going to continue to execute and just look at the year-over-year growth. As I said, 548% year-over-year growth in sales. And then finally, and I hate to bring this up, but at the moment we're trading at about 1.5 times our backlog, which is less than S&P multiples because of the rotation out of growth stocks at the moment. It's not for me to say whether this is a good time or a bad time to buy stock, but I'll tell you what, I think we should be a very attractive proposition.
It's a great story, Desmond. Both BEEM Global itself plus the industry BEEM Global is working in. Thank you for being with us.
My great pleasure. I love what I do. Thank you, Craig.
Now to get more information on BEEM Global, please call 1-800-REDCHIP. We also have a free weekly newsletter you can subscribe to at redchip.com featuring emerging growth companies like BEEM Global. Again, visit redchip.com and subscribe today. Now let's move on to our next interview today with ASP Isotopes.
Paul, it's such a pleasure to work with you and to have you here on the show today.
Thank you for having me. It's good to be here.
Paul, ASP Isotopes, an isotope enrichment company developing and commercializing isotopes of elements or molecules with low atomic masses. For viewers new to the story, please first introduce us to ASP Isotopes and then give us any important updates and milestones on your company.
Thanks. Yes, ASP Isotopes is a company where we develop and commercialize ways of enriching isotopes that can be used to enable many technologies and industries right now and in the future. We're at a pretty interesting time right now for the isotope industry in that Russia has been the largest supplier of isotopes to the world. And so we're seeing some supply side issues. A lot of governments and companies are questioning or re-looking at who they do business with. At the same time, on the demand side, there's a lot of new uses for isotopes emerging right now that will, for new healthcare applications and advanced technologies such as quantum computing and also green energy, such to allow us to meet climate goals in the future. And there aren't any suppliers of those isotopes. So again, there's a lot of new uses, and we're looking at supplying some of those. At the same time that many of the traditional suppliers are maybe having problems supplying or as a supply side issues. So it's an interesting time in the industry right now. We actually reached a major milestone our company did recently. We actually started our first plant up, which is probably the biggest milestone for any company when they start up. And this plant will enrich carbon-14. And actually the entire world supply of carbon-14 used to come from Russia. There isn't any available right now. And so we've been asked by a Canadian company to enrich carbon-14 for them, and they will then sell it to the end market. And so that plant started up recently. It will start by enriching oxygen, then it'll start enriching carbon-14.
Paul, that is very exciting news about the opening of the new plant. Congratulations on that. Paul, last November, ASP Isotopes announced that it had entered into a 25-year supply agreement with the Beijing Research Institute of Chemical Engineering Metallurgy for highly enriched molybdenum 100. That agreement is valued at up to $27 million a year. Give us some more of the highlights of that groundbreaking deal.
Yes, actually the contract's pretty confidential between the two parties. You've kind of summarized it pretty well, but obviously that's the first contract we'd actually signed. And that will, it's a pretty big contract for a company of our size. We intend to start supplying them during 2023. And that'll come from another plant we're constructing in South Africa as well. We have two plants currently under construction. The first, we just actually started up, as I said, for carbon-14. The second is a much larger plant that's capable of enriching things such as molybdenum 100 and silicon-28. And so we'll use that plant to supply the Chinese contract. And we're in discussions with lots of other potential customers too for materials. As I said earlier, there's a real change in world dynamics right now. And so, We actually have interest and demand for probably 4 entire plants of isotopes, which would be fully sold out on day one if we had the option to build them. So that's the kind of interest we've got from other customers. But the Chinese contract was the first one we signed.
Paul, ASP Isotopes has made it clear that of the many potential avenues that it can take with enriched isotopes, molybdenum 100 for the diagnostic imaging market is foremost. That agreement we were talking about with the Beijing Research Institute of Chemical Engineering Metallurgy, which was announced just days after your company went public, underlines this commitment. Give us some background on molybdenum or Moly 100. Tell us why it is important to diagnostic imaging, and please tell us why diagnostic imaging is important to ASP Isotopes.
Thanks. Yeah. So, so Moly 100 or molybdenum 100 is one of the first isotopes we're looking to sell. But right now, the biggest nuclear imaging contrast media is molybdenum 99, which is about a $3.5 billion market. And it's producing 10 nuclear reactors around the world. And 9 of those 10 reactors are going to shut down between now and the end of the decade, or they're scheduled to shut down between now and the end of the decade. They've reached the end of their useful life. So the world is trying to find a new source of molybdenum 99, which ultimately becomes technetium 99 and is used in the patient. And molybdenum 100 be that alternative. And so we're hoping that the molybdenum 100 we will be able to sell will be able to replace a lot of that molybdenum 99 that's currently used in the marketplace today. Molybdenum 99 also has a 66-hour half-life, so it halves in value every 2.5 days. You can imagine shipping a material around the world that's halving in value every 2.5 days and keeping it on the shelf. Terribly complex supply chain. And molybdenum 100 solves a lot of those problems. We're hoping the market will be excited to see our molybdenum 100 available.
Paul, thank you for that explanation of molybdenum 100. Can you give us some background on another important isotope, silicon-28?
Silicon-28 is going to be required to enable a lot of future computer technologies, such as quantum computing. What you find is that silicon's got 3 isotopes, 28, 29, and 30, and the 29 essentially blocks the current or stops the conductivity of the semiconductor. If you remove that 29, the conductivity increases thousands of fold. And so to enable quantum computing, silicon-28 is going to be needed. Now, semiconductor manufacturers use a gas called silane, which is a very light gas, and that cannot be enriched in a traditional centrifuge. It's too light. So other enrichers of isotopes need to increase the mass of their product and then turn it into a finished product at the end. We can just enrich exactly what the customer wants. So it means we can get it much more pure, much more cheaply. And so there's a lot of interest from governments and semiconductor manufacturers about our ability to be able to supply silicon-28. And we're in discussion with quite a few of those companies about a potential, supply of those in future years.
Paul, you've been touching on this in our discussion so far. I want to just delve a little more deeply into the fact that many of those nuclear reactors, those research nuclear reactors, are in China and Russia, and they are slated to be phased out. I want to talk about how you are an environmentally friendly producer of isotopes, and also just explain to us how your company's methods are superior over the current standards.
Yeah, well, superior is quite a big word to use, but different and has advantages, I would say. So first of all, our plants are very quick and cheap to construct. Unlike a big centrifuge, it has a spinning kind of tube. Our tubes are stationary and we spin the gas inside the tube. So there aren't any moving components, makes it much quicker and simpler to build. So it's a very green, environmentally friendly process. There's no waste material. We take a product, then we basically separate one part out of it and we give the rest of it back to the marketplace again. So it's very environmentally, there's no real radioactive waste or anything. It's a very efficient way to find products for the future.
Paul, I think it's fair to say that ASP Isotopes means to be an industry disruptor. However, unlike many industry disruptors, for example, in biotech, in which hundreds of millions of dollars and years of regulatory hurdles are needed to get something up and running, ASP Isotopes requires a much smaller initial investment and shorter timeline. Tell us more about the attractiveness of ASP Isotopes to investors interested in disruptive technologies and companies.
You know, our scientists have spent about 20 years developing this technology. So while yes, in other industries, a lot of development work and research work that needs to happen to get something to be able to disrupt an industry, that's already taken place during our company. And now it's about commercializing this technology and bringing it to the market to be able to enrich isotopes that the world needs. And so, you know, a small amount of research is required to modify the design for a particular element or a particular product, but a lot of the research has already taken place. And you know, whether we're a disruptor or not, I don't know. I mean, I'm not sure we need to be a disruptor, quite frankly, to be able to find a place in this market. It seems that the market is desperate for new suppliers of isotopes, and we're here ready to help.
Paul, give us the essential value proposition. Why should investors take an interest in ASP Isotopes right now?
Yeah, so listen, the whole industry is at a dynamic point right now. We've got a lot of demand for new isotopes that haven't been produced before. At the same time, the traditional producers of isotopes are either shutting down or we're seeing kind of disruptions. And so the whole industry is in a state of flux. And we're a very nimble company able to respond to that because of the time and speed at which it costs us to build a new centrifuge or a new enrichment facility. So that should hopefully mean our return on capital is very high and we're able to generate a substantial amount of free cash flow from these plants we build. And in my experience, free cash flow, lots of free cash flow means a higher share price.
Now, to get more information on ASP Isotopes, visit aspiinfo.com. You'll see research reports, fact sheets, presentations, and the latest videos. It's all free. You can even subscribe to email alerts to stay on top of the latest news. You can also call 1-800-RedChip to speak to a specialist if you have any questions. Now let's recap the companies you met today. First, you met BEEM Global, stock symbol BEEM on the Nasdaq. Based in San Diego and Chicago, BEEM produces Made in America products for the massive and rapidly growing EV charging and energy storage markets. With triple-digit growth in sales, a robust pipeline of new opportunities, no debt, and cash to fund its growth, BEEM Global is well-positioned for continued success. Again, to learn more, please call 1-800-RedChip. Then you met ASP Isotopes, stock symbol ASPI on the Nasdaq. ASP Isotopes is currently constructing a production plant in South Africa to address significant interest from potential customers. With volumes already exceeding 100% of the capacity of the first plant, the company intends to enter into a take-or-pay style offtake agreements with customers. And by 2028, ASP Isotopes expects to be a leading supplier of non-nuclear enriched isotopes, generating over $150 million in EBITDA per annum. Learn more by visiting aspiinfo.com. Again, if you have any questions about any of the public companies featured on today's show, please call us at 1-800-RedChip or email us at info@redchip.com. In closing, remember, while small caps can provide significant gains, you must be prepared for the downside. Small cap stocks are among the most volatile asset class. Some of the companies featured on this show are RedChip client companies, and we may own stock in these companies, so please always read our disclosures at redchip.com. Thanks for being with us today. We'll see you next week with some new exciting emerging growth companies.